Most bonds in Australia are traded through the over-the-counter market. In fact, 95% of bonds. And the market's worth approximately $1 trillion, so it's a really big market. So there's no central exchange for bonds. You need to find the broker and they'll talk to you about the buy-sell prices of the bonds. Traditionally, the wholesale market only traded in minimum parcel size of $500,000, making the market inaccessible to individual and middle market investors. But fixed income dealers and brokers have identified bonds that can be broken down into smaller parcels from as low as $10,000 and that are available to retail investors. There are many advantages to the OTC market. The first is the sheer size and the number of issuers. In fact, there's over 230 issuers into the market. There's also a lot of investors, so there's very good liquidity, which means you can sell the bonds at short notice without loss of value. There's also a very good range of the three types of bonds available, so the fixed rate, the floating rate and the inflation linked, whereas the ASX listed market doesn't have that same range. One of the things that differs between the OTC market and the ASX listed market is that because the OTC market is predominantly wholesale investors, they've got a very good understanding of the pricing of risk. So the investments that you make there have a better appreciation. Often you can be paid more through the OTC market for similar investments. The disadvantages of the OTC market are that you have to invest a minimum of $10,000 face value, which will preclude some investors. The other is that because there's no exchange, it's difficult to discover price. However, brokers will usually publish price on a regular basis. And the third being that you must find a dealer or broker to be able to transact. In conclusion, the OTC market is really huge, with over $1 trillion invested in bonds in Australia, with lots of different investors. It's a liquid market, and it's a market that I'd highly recommend you consider.